Yo, what is going on, you guys? Jerry Trades back in another trading recap. So I was working on going ahead and setting up a little bit of these charts here and a little bit of references that I'm gonna be using for this market recap. So I was struggling setting it up here with TikTok, but I hope all of you guys are having an amazing day. Market is still open at the moment, but I'm gonna go ahead and jump into this chart and show you guys what it is we are working with today when we were trading here with Spotify. So I was looking at Spotify mainly because it's been in an oversold position, and it's really been, there you go, working on its business model as they have now trying to raise their prices going into 2026. Let me go ahead and fix this chart here so I can bring the data up higher. So this is Spotify's chart here, right? Let me go ahead and zoom in a little bit better. So I'm gonna use the 1 minute chart just to show you guys exactly what was happening. Going into, step back 1 second, and a bigger time frame. I want to point out first the trend. We got a clear bearish trend. It's just been bleeding over the last. We see here September 2 months ago. We are trading at now 3 months ago because we're in December trading at $735. Now we're at 580. So if we get closer here into the trend, you're gonna notice and you're gonna see here. Look at this support. We've been hitting this level here, 580, hitting this level here, 580, hitting another level here today, 580. What a supply zone being here, 568. 568 would have been an amazing place to enter call options, but obviously already missing the opportunity. I had to work with what we had. So looking at the supports of 580, I'm looking to play some sort of a rejection, of bounce off the support that's going to start generating some sort of profits here. So this morning, this was the game plan. Entering here, I seen at the beginning of the morning, we got this big tanked off, boom, sold off. But although we had the proper movement in the chart, it's very important that you guys learn this lesson here. When I was buying these contracts, it's very important you guys understand that there's contract volume and company volume. If you guys don't know what volume means, it's just a way to kind of calculate how much people there is trading either the company or trading the contract. There's a difference in those two numbers, guys, right now. So if I move this chart out the way, let me move this chart here. This one needs to get rid of it. Oh, wow. That might be a problem unless I can fix it here by adding this source, game capture. Sorry, guys. Boom. Now here you are. So this is the Spotify stock, right? This is the company. And if you guys ever want to look at volume, you would just scroll down here. Currently down 53%, which is pretty not bad. I was down 70% earlier. But if we look at the average volume, here is 1.88 million. Today's volume 1.25 million. So there's only 1 million and I would say 1,250,000 people trading here. Spotify today, and that's where I was really pointing out. Okay, this trade, although the setup in price and in the chart is amazing, really this doesn't fall in my, what would I say? This doesn't really fall in my ideal trades. What do I mean by this? Well, I like a lot. Usually, when I trade companies that have a volume of above 10 million. Usually, when a company has volume above 10 million, whether it be average or current day volume, you see a lot more volatility. So, you see prices go up and down a lot quicker. And although, with currently working with 125 million people, if we go back to this chart here, let me go ahead and move this out the way while I'm still having access to it. And we go back to the chart here, we noticed, we were consolidating between a range here of 583 to a low of 580 for the most part. So we had a $2 consolidation range practically all day today if you were to just highlight all of this. All day today. We had some, little breaks in the fortress where we went down to as low as 579, but for the most part, we consolidated between 583 and 580. So this is very important. When you're seeing a low volume, a low company volume, trading volume. So I'm referencing this back so you guys are learning here. Look at the volume here for the company. It's 125 million. So there's not going to be a lot of aggressive price action as a company that you might have 100 million people trading the asset. No, they only have 1 million. So there's going to be less transactions, less buys and less sells. So now that you understand this, going into now purchasing the contract. Well, looking at what we're trading at 580, previously Friday close, we're up here at a low of 600. Right here, we closed market at 600. So I'm like, okay, you know what? Targeting Friday's closing is kind of realistic. It's pretty shot off, but at the same time, I can create value in the contract as we approach that strike price. Whether we hit it or not exactly, at least I know that I can target here this gap of 590. Let me go ahead and bring the chart back. So okay, I understand. I wasn't showing you guys that, but there you go. So Friday's close was here. This is Monday. This is Friday. So when we closed on Friday, we closed at a low of 600. That was closing price. Now, I'm aiming for $600 calls, but I'm not looking to really hit the strike price. I'm looking to get somewhere in the middle here at 590, 591. If we achieve these values at this price point, my contract will have gained value, although not hitting the strike price. So if you guys don't know what a strike price is, a strike price is essentially where you predict price will be. You buy contracts to eventually see shares at that price. So 600 would have been ideal, but realistically 590, 591 was very likely. Coming off of last week, a little bit of a sell momentum here. Going on Tuesday, we had a short week, but we had an aggressive jump here, almost 581 to 600. You're talking about $19 in a single day in gain. So that, these price movements, looking for $6 is very possible. So when I was looking at the chart here today, what I didn't notice, and I want to share more importantly with you guys, is when you look at this here at the Spotify. Let me go ahead and bring up. Okay, let me bring this up then. 1 second, guys. This is so tough. Now, alright, so that's the company's volume, right? Now let's go ahead and dive deeper into the contract. So looking at today's contracts, I'm trading here in 602 5C, remove from watch list. Go ahead and add it to watch list, view watch list. $602.5 call right here. Boom, look at this right here. Now this is where I messed up. So company volume being low, it is what it is, right? You could work with it. Now, contract volume being low, you have a problem. Now let me explain to you guys why you have a problem. If your contract volume is low, remember, volume represents how many people are buying and selling the asset. Well, in this contract, unfortunately, when I entered, this volume was literally at 1. There's one person trading this contract, and it was me. Open interest is at 5. To my understanding, open interest are individuals that are interested in this in the asset or have it added to their watch list, or are somewhat bidding for it at certain prices. That's my understanding of open interest. Volume are people that actually have it. So if I have 4 other people here, right? 4 other people that I'm negotiating with, I'm not going to have much negotiation. What they offer to pay is technically what I have to sell for. I can't leverage my position here as a seller if there isn't enough people to buy. So let me go ahead and bring this into different terms. An individual that has a product to sell can charge what he wants when he has a bunch of people trying to buy it. But if an individual has a product to sell and only one person wants to buy it, you can't charge that person what you would charge all 1,000 people trying to buy it. If you have a low supply, if you have a low demand, you can't charge a lot for that supply. But if you have a high demand, you could charge a lot for that supply. Does that make sense? So now that you guys understand this concept, individuals here on this trade were currently bidding $270 a contract. I purchased this contract top of the morning for 640. But keep in mind, I thought I got a deal. Why did I think I had a deal? When the contracts opened this morning, they were sitting here at 740. Let me go ahead and show you guys that. $740 is what the bid was at open. Now, I got a deal because I bid for 640. Buyer took it. My whole time, I never noticed the volume here being so low at 4. I'm like, you know what? People are going to jump in this contract. There's going to get a little bit more midday attention around it. Fine. I entered. Little did I know, to my surprise, this number hasn't moved anything. And now contracts bids are at 270. So we go ahead and subtract 640 from 270. Go ahead and subtract 640 from 270. We have a pretty decent loss here of $370. That's how much contract value have lost in one day. Now, the problem here with this trade, right, is that we might not get, these aggressive jumps up. We have a decent amount of economic events here in the week, but at the same time, I would have expected Spotify volume to be much higher, and this puts me in a really tough position with this account, because growing it from $500 to $1,000 and to $10,000, well, when I entered this position for $640, our total account value was $888. So now our current value on this account, going here and reflecting this, we were at 900. No, this is when I had that increased value. We started at 829, currently at 485. So now let me go ahead and show you guys a little bit of a problem here. When you're trading with these small accounts, right, it's very difficult to find good positions that are going to provide you that return that you're looking for. And I mentioned this similar example on my last video, where I'm talking about 10% but different capitals. 10% of $1,000 is $100. For some, that's a really good take. $100, 20 minutes, sure, why not? Let's rip that off the table. Now, if we put 10% of $100, that's going to be $10. Same percentage gain, but less capital, and psychologically, less chances of selling. So, me, obviously trying to escape this pattern and start working with higher capital to make these returns more at a level mentally that for me are worth exiting and taking as profits. That's when I essentially seen the problem where, like, I have to take a bigger position. So this weekend I was looking for setups, and I'm like, well, Spotify is in a really good spot. I looked at AMD being in a really good spot. I looked at Intuit being in a good spot. Unfortunately, today, I wouldn't say I was fully conscious around valuing the other opportunities, and I was really biased towards Spotify, and I unfortunately have paid the price here and borderline losing this account. Let's say that tomorrow morning, right, I miraculously get to even break even. That'd be fine. But if I have to take here, let's go ahead and look at this position. How much is it down? If I go ahead and take here $347 loss, I just set this account down to $400, and now the chances of me finding an opportunity that's valued at $400 to jump this account back up, I just made life so much harder for myself. And that's important that you guys understand when trading. How much of your portfolio value are you risking for such reward? And I would argue with you guys that there is opportunities that are you can argue are worth taking the risk on or taking the opportunity on. When you have a position that, for example, I don't want to, let me see if it'll switch the chart here to Intuit. It does. Nice. So if you have an opportunity here, right, let me go ahead and show you guys a similar chart pattern. Intuit, another company, INTU, in this oversold position, right, previously trading at highs over here. If I go back, boom, 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 let me go to a 4 hour. If I go back here, we're previously trading at $888 over here. $808 back in August or end of July, early August. Now we're trading here at a low of 632. Let me bring this up. Yep, 632. Low 632. Let me fix this chart right here. Low 632. And this was a similar trade, just like Spotify, trading in these places of supply. Now, look at the price action here on Intuit, and I want you to also pay attention to look at the volume of the company. So, look at the price action here today. Fixing this chart for you guys. We went up from a low here at market open, rallying up, coming out aggressively from 628 to a high of 634. 28 to 30, that's 2. Another $4 is $6 in gain. Now let's go ahead and take a look at the company's volume and the contract price increase. So if I go to Intuit, and this is important. Now you guys see from my mistake here that very important to look at these companies' volumes, also volumes in the contracts. So bringing up back this screen here. This is so I don't understand how it's possible. Getting used to this whole technology thing is kind of tricky. Alright, so we have a 20% gain here on Intuit, but let me just show you guys here. Intuit company volume actually lower than Spotify. This is actually surprising. 871,000 people, average volume being 212 million. But what I can argue here is look at this contract value. If I go to this contract value here, if I go to the main watch list, look at the contract value of this contract here at 640. Look at the volume here. 511 people compared to Spotify's 4. So although we have less volume trading in, the essentially company, there's more volume in the contracts. So looking at the comparison of volume traded in the company and volume traded in the contracts, I would say if you're trading, options, it's better to have volume here in these contracts because then you have a higher chance of negotiating. Look at these contracts at this morning's low of 330 reached a high of 635. That's a $330 gain right there. So one hell of a lesson today. I was completely biased and blinded jumping into Spotify without taking a deeper look until I was already in the crossfire. And that's where, you really are going to find out that no matter where you are on your journey, how much experience you have, you're going to make mistakes. And that's what a lot of individuals have to realize when they're trading that. It's what comes with it. Like, there's going to be these small errors that you are going to learn and realize from. And that's essentially why I started these market recap videos, to really just highlight, the gains, the mistakes, and share them with you guys to really just give you guys more input or info from another perspective while you're also learning on your own journey. So make sure to use these videos as reference. I hope they were able to help you. Currently Spotify down on a loss, looking at around a 71% loss on this position. Not looking too great, but we'll see what we make happen for tomorrow to try to close the week. Hopefully still green. So I hope all you guys have a wonderful day. Thank you for December's 1st. Welcome to the first Trading Week of December. Wish us all the best of luck. Jerry Trades the SoCal Trading Group, over and out.